Hi everyone, Chad Shoop here, and today I want to show you something that I think is going to blow your mind. So that's a big statement, but I have the charts, I have the visuals in the data that's really going to help back this up, because for decades now we've been using the same basic price chart to analyze the stock market. It's a simple price chart, shows the price, can have the volume on it, and it's a great tool in a great way to just visualize everything in the market. That's why it's the steady, consistent way that we view prices in the market. But as a technical analyst here, once we get into the trading side of things, you look at some of these charts that people post and that they use to kind of keep up with the moves in the market. So they have a lot going on in one chart. It's a lot to watch. And at the end of the day, I've learned that it's best just to simplify your approach down to one smooth, clean, easy chart. That way you don't get all these mixed signals and all this basically distraction from maybe the trend, maybe the big trade that you're missing out there on the chart. So the one that we are going to walk through today, something that I call the profit radar. So you probably heard about it. There's a lot of the articles that I write about. I touch on it almost every single time that I write about a stock because it's that important. So what is it? It's called the relative rotation graph, the RRG for short. And the guy who created it, Julius DeCampano, he made it famous basically to give these Wall Street traders this 30,000 foot view of the market. So I'm going to show you in a minute on the charts exactly what that means. This chart is just the big picture view about where these stocks are sitting and relative to the rest of the market. So make sure that you subscribe to our channel, scroll below, click subscribe as we're going through this video, because in a lot of my YouTube videos, I'm going to talk about the relative rotation graph, or as I like to call it, my profit radar. And by going through this video today, you're going to have a great understanding of how it works. So this is a chart of every stock in the S&P 500. Right now, as it sits, these are stocks in the S&P 500. And then you can see the four quadrants here. In the top right, we have the leading quadrant. It's a green shaded. In the bottom right, we have the weakening quadrant. It's kind of yellow, faint yellow. And in the bottom left, we have the lagging quadrant. And then in the top left, we have the improving quadrant. So these are the four areas that we're going to see this rotation. You can kind of see it now already, because I have the arrows, the headings show you which direction they're headed. And then this is called the tail that kind of tails off and shows you the last 4 or 5 days of where the stock was. So you can already see that there's this kind of circular rotation that kind of takes place. I mean, some of these are turning lower, some of these are turning higher. So we're starting to see some of what I was talking about, how there's this natural rotation from stocks that once they get to the leading market, they don't lead forever. They're going to pull back, fall through the weakening, get back to lagging the whole market, and then start to turn higher from there and improve and get back to leading. It's just this never-ending cycle that stocks naturally go through. It's the natural rotation in the market that we're going to analyze today, and just a great way to visualize it. And keep in mind that these are all rotating around a center axis. So there's a center point in these charts, and in this case, it's the S&P 500. So what I'm plotting here is the S&P 500 at the center. Then all the 500 stocks within it, we're looking at how they rotate around the S&P 500. So now let's scroll through and let's see this thing in motion. We're going to scroll through. We're starting here in about May 2021, and we're going to scroll up to about March 2022. So let's start going through this. And I know it looks pretty crazy, kind of squirrely, just lines going all over the chart, but just take a minute and just watch this thing as it rotates here as we get into 2022. Now, I hope you're seeing this rotation take place. That these stocks are just generally rotating clockwise around the center of this chart. It's not a perfect circle. It's not a perfect oval by any means. It's the market. It's a natural move, and it's going to have, some exceptions to the rule. It's going to have some volatility in here. We're going to see things move all over the place. But for the most part, we're seeing this natural rotation take place. And this is the basic concepts that I use in my trading. Just that stocks that are leading, they're not going to lead forever. They are opportunities for bearish trades. And stocks that are lagging are not going to lag forever. They're opportunities for some bullish trades. And I'm going to show you another charts here in just a moment that's going to really take this over the top. So stick with me for now. But I wanted to explain a little bit more about how this chart works. So here's the center. So this is the S&P 500. So think about the center of this chart is less volatility. So if there's a stock rotating tightly around the center, it's more or less just moving with the S&P 500. We're not getting a lot of momentum. But the further out you go away from the center, the more volatility we're seeing in these stocks. So in this case, United Airlines right now seeing a lot of volatility. We have Moderna up here seeing a lot of volatility. PayPal just the further we go. And you can see also some are off the charts here. I can zoom out so we can have a bigger picture. This is Nielsen Holdings, off the charts over to this side. Down here, Occidental Petroleum to the downside. And we still have another stock up here. We see the dot. That's EPAM Systems. So these are stocks that are seeing extreme volatility based on where the S&P 500 is. That's just the whole big picture approach in a nutshell. I'm looking for a lot of stocks that drift down here a little ways, so that way we're getting more volatility and seeing bigger moves as they rotate up. And because this is really the foundation that's behind the relative rotation graph, is what goes into this chart, what makes it so phenomenal. When I hover over this, you can see a lot of the data that it's showing on the chart. So it's an extremely beneficial tool, and this is my favorite thing to do and to play around with in Optima is look for more trading strategies around this relative rotation graph. But here you'll see that the ratio is at the top, 96.6. That line is essentially the relative strength of United Airlines compared to the underlying index here, which would be the S&P 500. So it's not a one-for-one ratio, but this is what the ratio line is telling us. It's the measurement that they use to compare for the relative strength. And relative strength is one of the strongest technical tools in our arsenal because it shows us whether a stock is outperforming the S&P 500 or it's underperforming. Now, how traders use that is they don't care so much just that you're leading or lagging. They want to get a ratio line, which is what this is, the ratio. They want to create a ratio line so you're comparing the United Airlines to the S&P 500, and then you're going to plot that on a price chart to where it looks like a normal price chart. And whenever it's heading up, it means that United Airlines is outperforming. Whenever it's headed down, it means the S&P 500 is outperforming. So they can do that to look at the ebb and flow of where the stock is outperforming or underperforming and look for opportunities to trade based on that kind of altered price chart. So it's an extremely popular tool that traders use. It's one of the strongest tools as well, just in overall performance. It's the most consistent things. We see all these charts, like I mentioned earlier, where they got all these different indicators on there. And there's a reason they do that is because they're not that consistent. So they're trying to look for things that all line up. And then whenever maybe they have 3 out of their 5 indicators giving them a buy signal, they think it's a great trade and they jump in. But they're trying to just line up multiple buy signals with one trade. And to me, that never usually works out. Smaller strategies are better. The simpler approach, the better. And with this, we're really simplifying into 2 of the strongest technical tools out there. So relative strength is one of them. The second one, and this is kind of what you need for any trading strategy, is momentum, right? So relative strength helps us determine whether a stock is leading the market or lagging the market. Once we get into momentum, now we get to add in these weakening and improving quadrants into the chart because it's taking the momentum of that relative strength line. So it's combining all of it in the one. We're taking the relative strength and then we're looking at the momentum of that line to figure out when a stock is in the leading quadrant, but it's starting to weaken and fall lower. The momentum's slowing. So it's starting to weaken, ends up falling back to lagging. And then we look for the momentum to shift again. We look for it to show some improvement and start to head higher. So those are the 2 technical indicators in this one chart that make it so powerful. So I was just blown away. I could not keep my eyes off of this chart. It's the one that I've been kind of buried into here for years now. It's my favorite chart, my go-to analysis. And I even included it once we pull up the price chart. You can see that I included the colors here of the relative rotation graph from this chart just to show us where the stocks are as we're trading this. So right now we can see that United Airlines is in the blue quadrant, which is where it was right here. It's still in the blue quadrant, heading higher, came out of the lagging quadrant a couple of days ago. So all that data is right here on this chart. We see that it was in the lagging quadrant, turned higher, started to head into improving. And then the next quadrant we would look for would be leading. And then you can see, just going back a couple of these, once it gets to the leading quadrant, it tends to slow down and head lower. It tends to slow down and head lower. It was already headed lower. So we see this rotation playing out here on the price chart because we're shading the colors of the candlesticks based on the relative rotation graph. And this is the simplistic way that I've been showing this for years now, because instead of having to come back to the relative rotation graph and show you where the stock is and then get into the price chart and look at some other technical indicators or key levels, I have it all on one chart. It's a super clean way just to keep up with everything. So this is how I've been using it. And from here, we've expanded and developed multiple strategies based on a variation of this chart that you're seeing. Because what we can do over here on this side, let me scroll over a little bit, is that we can on these scripts, we can change things. So I can change the sensitivity, and you'll just see this kind of flatten out on the vertical line. I can zoom out a little bit to show you there. It's flatten out a little more vertically, and it's just changing the sensitivity more to the ratio line. And then we can swing it to the other side, make it more sensitive to the momentum side of things, seeing just quick drops and quick moves higher. So there's different ways that we can change the sensitivity on this chart, which is awesome to be able to have that flexibility. In Optima, you don't have this type of tools in other free trading softwares where they may include this, but in Optima, we can change all that, and then we can change the time frame. We can go from daily to weekly to monthly to year, and if I had this hooked up to a Bloomberg terminal, then we can go all the way down to 1 minute charts. And then date range, we can change that. And right now, you can see that we have the comparison index of the S&P 500, that's the SPX. And those are some of the things that you can change here. But the other great thing is that we can change any stocks that we want. We can put anything at the center of this. You could look at cryptos on a chart like this. You could look at just pot stocks on a chart like this, just semiconductors. You can blow it up with all the semiconductor stocks and put a semiconductor ETF in the middle to figure out which ones of those stocks are the best to buy and sell and trade. So literally anything that you can plot on a price chart, we can put here in this relative rotation graph to give us the same visualization from all over it, from currencies to commodities, stocks, cryptos, you name it. Then we can change the time frames. And just by making all these changes, there's so many opportunities here to make money and to use this as a trading tool, because one of the best things about technical analysis is that a system is only considered viable if it works across not only time frames, but also different asset classes. Now, a lot of different asset classes will trade differently, and momentum's a bigger impact than some, and reversals are a bigger impact than some other trading. There's little things that you can do to different areas and try to pitch a better strategy. But for this, it really is this simple. This is a simplistic approach that we use that works throughout all these different industries. And that's because of the chart, because of the inputs that go into it, and because those don't change. So it doesn't matter what we're looking at. We always have a foundation to go back to as a way to trade this. I wanted to test what happens when we see a stock cross into the leading quadrant. I've listened to podcasts. I've listened to YouTube videos about other people and how they trade their relative rotation graph. And this is really their takeaway from it. If it's in the leading, they buy. They look for it to continue higher. If it's in the lagging, they want to avoid it. They don't want to be around it when it's underperforming the market. I flipped that on its head up quite a bit for the way that I trade things. I've already mentioned that when it's leading, I look for weakness. When it's lagging, I look for things to turn around. And this is exactly why I've started to do that. So here is their signal tester, as they call it. And basically, we're just going to run a test. Same stocks, the S&P 500 stocks on the S&P 500, just over the last 12 months, so the past year. And we're looking at the 10 days before and 30 days after on absolute returns. Now, here's the code. Now, the quadrants here, we're going to start with the leading quadrant, which is 0. So in Optima, the leading quadrant is 0, weakenings 1, then lagging is 2, and then improving up here would be 3. So to start with the leading quadrant, we're going to start with 0. They call it the JDKRS as kind of a toast to the creator, Julius de Campanile. That's his initials, and RS for relative strength, because it's basically his take on relative strength. So that's what they call it. We're looking at daytime frames. We have the quadrants, the S&P 500, and we wanted to look at the quadrant when it changes to 0. But you can see here that we can test on all these different data points within the RRG. So it's really neat, really fun to play around with for me. And I love to get into this. And we can adjust the sensitivity here too, like I was showing you before, to create even different scenarios and different trading opportunities from this. But for now, let's keep it at 4. That's the basic level. Change to 0. Let's apply this, and then we'll run a quick test and just see what the data looks like. And we'll do this 3 times. The first one that we're going to look at is going to be the leading quadrant. And main things we want to pay attention to is probability of a gain, 52%. Not that high. This is just over last year. Again, everything in the S&P 500. Just what happens when it changes into the quadrant. And then the mean return, 0.63%. Now I'm going to compare all of these, but I did want to point out that up here you can see that the 10 days before they enter the leading quadrant. So this is leading. This green line is the relative range of the stocks and their performance. The yellow line is the S&P 500. And then once it has a red line over here, it's just showing you the outperformance or overperformance from the S&P 500. But we see that they are heading higher going into the leading quadrant. So that shows us that things are while they're in the improving quadrant, they're typically heading higher in a pretty strong rate before they get into the leading quadrant. Now let's see what it looks like in the weakening quadrant. So this is the weakening quadrant. As we pull that up here and show you the returns there, so you can see that the returns went down quite a bit, 50% from 52%. Not that big of a change, but when you look at all the signals that they're testing here up here, it's 3,000 trades. So it's a lot to move the needle on 3,000 trades. So to see that, it's dropping 2.5 percentage points there on a probability of gain, that's a pretty big deal. And then the mean return, 0.06%. So the weakening quadrant is not when you want to buy. This is we're not seeing big gains there. It's basically flat. But what I wanted to show you up here on the top is that as we went backwards on the last 10 days before this signal, before it crossed into the weakening quadrant, which is over here, we see that the stocks tend to peak and then start to weaken. So we're seeing this rotation already starting to take place before we get into these moves. So now let's look at what happens as they go into the lagging quadrant. Again, this is lagging the market, underperforming. Once they hit that quadrant, what happens to the stocks? So let's pull this up. And as we compare this, you can see that the win rate went back up 52%. The mean return went back up 0.56%. So it's just on par almost. The leading quadrant was still better, but this is almost on par, even though the stock's in the lagging quadrant. And you can see the 10 days before it hit this, and this is over just a 30-day time period that we're testing, the stocks were falling. So that's through the weakening quadrant. We're seeing the stocks fall. So we can kind of line this up that you can see that right before they head into the leading quadrant, we see that they have a nice run up. Then when they're in the leading quadrant, they top, start to weaken. Then in the weakening quadrant, continue to head lower. Now our last quadrant that we have to look at is the improving quadrant. So as we throw that one on here, our last one to kind of complete the puzzle, if you will, is the improving quadrant, a 55% win rate. So this is the strongest win rate that we've seen so far, and it's in the improving quadrant. So this is the one up here at the top, right before it gets into leading, and the strongest mean return, 1.34%. So again, still 3,300 test results, so about 3,000 test results. So about the same. This is a big difference from where we were. It's more than double the returns that we are seeing even in the leading quadrant, even in the lagging quadrant. So this first quadrant is essentially the improving quadrant, where things are going up pretty strongly, and we see that in the results that shows that that is a strong performance there. Then when they're in the leading quadrant, still moving higher, but eventually it's going to top and start to weaken before it falls into the weakening quadrant. And then once it's in the weakening quadrant, it shows a lot of decline there. It was the worst performer there on the metrics, just basically flat for the mean return, lowest win rate. So that is not the time to be bullish on the stocks. And then in the lagging quadrant, we see it bottom and start to turn higher. And a pretty strong performance there, considering it's lagging the market and having to bottom and turn higher. So that's all good to see. And this is what blows me away. This is the important part to me, is that it takes what we're looking at, the relative rotation graph, all the squiggly lines, even the color bars that I add to our price charts, and just brings it all together in here in one simple format. That this is what we're trying to trade. This is what we know, is that it's going to make this S movement throughout these quadrants as part of the natural rotation, not only of the stock's life, just of the entire market in general. And we can time this using the profit radar, using the relative rotation graph to find these opportunities to make trades in the market. So that pretty much sums it up. That takes us from the beginning, from the price chart, through the relative rotation graph into these four quadrants that are so important, and just understanding that this works on different time frames, different sectors of the market, different asset types. We just change what's at the center of the chart, change what's going to revolve around it. Everything that's relevant is going to give us some great information that we can trade on. So thanks for tuning in today. Until next time, I'm Chad Shoop.